I've been optimistic, and I still am, but I'm tempering that optimism just a little bit. I think I'm naturally just a little contrarian. But I think the market's pretty fully valued at an index level. A lot of those gains have been driven by the so-called Magnificent Seven, these big technology names. So I do think there are some opportunities for some broadening in the stock market. Jim's going to talk about small caps here in a second. It's never a good idea to sell stocks based on valuation alone. Just because stocks are fully valued doesn't mean they can't continue to be for some period of time. But it is probably a good time to think about rebalancing and rebalancing to your long-term allocation. The stock market's had a good run, and particularly even into this year. So if you're overweight equities, this would be a good time maybe to take a little bit of that off the table and rebalance back to your long-term target. We did a little bit of that recently in our funds. We're still a little overweight equity. We still like stocks. But I do think we're going to see some bumps. Volatility has been historically low recently. I've made the comment it feels a little 2017-ish in that was a year with low volatility and the market kind of grinded upward. Fun little story, I actually called my mother last night. And I, we were talking about this event, and I'm sure, hi Mom, I'm sure she's watching. But she said, I noticed people aren't talking about the market as much these days as they were maybe a year ago. And I thought that was a really good assumption. That's what happens in a lower volatility market where it continues to grind higher. And I tend to be a little skeptical when the market and people overall tend to be a little optimistic. So we still love stocks for the long term, but even when you're long-term bullish, it's good to have a little dry powder. And so, I think we would be looking in a market downturn probably to add to equities, but I kind of like being kind of near our long-term target right now.